Hi everyone, this is Brian Neal with Tradetobefree.com and Investbefree.com, and today I'm going to talk about one of the most bullish chart patterns in the market, and a very well-known pattern that a lot of traders use and recognize, and it's called the double bottom pattern. I actually found this on one of the major index charts recently of the past few months, and I wanted to use that as an example and also give you at the same time a market update. Okay, so the double bottom pattern is basically, as the name suggests, two successive lows, okay, followed by a move higher. All right, it's a trend reversal pattern. That's what it's known as. However, it's more bullish when you find these patterns within a long-term uptrend. And as we can see on this chart of the S&P 500 over the past 6 years, we can see that we've had a very strong uptrend from the lows here in late 2011 up to the highs last year. Very strong uptrend leading into the pattern, and then the pattern starts here in July or August of last year, I believe it was. You can see the price moves down, the index rebounds, and then it pulls back again. And actually, if the second low takes out the first low, that's actually more bullish. That's actually more constructive. And then we can see the price rebounds, and the entry point on this pattern is a move above the center point. It also can be the move above a handle. Sometimes you get a horizontal consolidation for a few weeks or a few time periods. If you're looking at a daily chart, you can find these on a daily chart, on a 10-minute chart, intraday, a lot of different time frames. And on this chart with a weekly chart, if we see a horizontal move for a few weeks after this move up off the second low, that would be the handle. So the entry point could be that the move above the handle or the center point. Both will act as resistance as the price moves higher. Now we can see that shortly after the Brexit vote, the market shook out the weak hands here in the handle, which often happens with these bullish patterns when you have a handle develop, and then the price goes the other way and breaks out, and that's the entry point when you go above that center point in the pattern. Okay, now usually you want to see that breakout on very strong volume. Now it's a little bit different with an index because it's the entire market excuse me, and so it's more difficult to have that really large increase in volume. Now if this is a stock, you definitely want to see the volume explode 50%, 100% or more. Ideally you want to see the volume 300, 400% or more above the near-term average as the price moves above the center point in the pattern, okay? And that at that point should act as support. So what often happens is that after you break out, you get a test of this breakout area, the high of the center point. And you want to see that center point, the top of that area, act as support when you come back and test it. And that could offer another good entry point. So if you see that test on lower volume, and then you see the volume pick up as you start moving away from that center point. So if it comes back down, test this 2116 area and starts to turn around, maybe go a little bit below it, 1 or 2%, and it starts coming back up on very strong volume and starts to challenge these highs that we've seen recently, that would be very bullish as well and could offer a very good entry point. Unfortunately, we didn't see the huge volume on the breakout. We saw this big volume bar on the week of the Brexit, but that was mostly downside volume and not so much upside volume. It did pick up, and it has picked up recently, and that's a good sign. But it's not this really strong breakout that you want to see generally with a double bottom pattern. So it's bullish, but it's not really strongly bullish at this point. But what we can say at this point too, though, is that what we have is a large consolidation within a very long-term uptrend, and at this point we're still bullish. We went bullish once we started breaking out of the pattern, but we're going to stay bullish until such time as we see a bearish market signal. But in a larger picture, what we're seeing is a consolidation, a double bottom pattern within a longer-term uptrend, which is actually very, very bullish on the face of it without getting in too much detail with the volume on the breakout. But this is a good example of a double bottom pattern. It's pretty textbook, actually. You can find these on top growth stocks. Definitely look for these. And although it's a trend reversal pattern, again, find these within a long-term uptrend. When you get that correction in a stock, you'll have that second test of the recent lows, and you'll see that double bottom sometimes being created, and you want to watch for that and watch for the breakout to the upside. Again, if it's on really huge volume on the breakout, then that's bullish. And if you miss the breakout, you often get a second chance within a few days to a few weeks on the test of the breakout area if it does come back and test that breakout area. Okay? So that's double bottom pattern. Great example, and also to let you know that we have seen a bullish consolidation pattern now for the overall market, and we're still trending higher. So that's bullish in the short term. Let's see how August plays out. We're watching closely for any signs of a bear signal, but so far so good. I also want to go over to the price of gold because that also is in a bullish pattern, and I'm going to bring that up here, the GLD, which a lot of us trade, go into gold. And I wanted to show you this too because right now we've just completed a pullback on the price of gold. We can see we pulled back to a recent consolidation. The top of the prior consolidation around 125, we actually forecasted a move back to 124 to 125 and thought we'd see a rebound around there. And that's been the case. And we can see now that the price has moved back above key moving averages, including the 9 EMA and the 20-day moving average. And it looks like it wants to go higher and test these highs up here. And we can see the volume increasing on the GLD down here. So that's good. And one of the top picks this week in our newsletter was this stock, Hecla Mining. It's actually formed this bullish inverted J pattern, and it's actually cruising right now back above the 9 EMA, and it's still above the 20-day moving average, cruising right into that high of 634, and it looks like it wants to break out of there in the near future. So if we see a move above 630 or 634 tomorrow, that would be a great entry point on this trading setup. So that particular trade could go 20% pretty easily within a week or two. So that's definitely one you want to take a look at, consider. You always want to play with a tight stop loss, a fairly tight stop loss on this. We're comfortable enough to wait for a close below the uptrend support, but you could even put a 4 or 5% stop loss below ideal entry point. Not where you get in, but the ideal entry point will act as support on a pullback to test that breakout area. So that's another good setup this week. Has a lot of potential to it. And again, you want to make sure you have a good stop loss strategy in place before you enter the trade and put that limit order in for your target sell price. All right, well, that's about wraps it up for today. So if you want more great setups like this, we actually have one more that's actually in a larger pattern than this and has more upside potential. And we have that on our website. And we also have a few other setups this week that look really good. Get over to our site and sign up for that free trial. As I record this, there's no requirement for a credit card number or anything. Just enter your name and email address, and we'll send you 3 weeks free of our newsletter. And you can log in, at least at this point, as I record this, you can still log in, see all the trading setups during your free trial. If not, you'll get our top 2 setups for the week emailed to you. All right, that about wraps it up. Like the video down below and subscribe to our YouTube channel, and you'll get our latest video once it's released.